Welcome back to A Bite from the Money Sandwich, where we provide practical and easy to understand tips and ideas on how to manage your money better, so as to let you retire with comfort and on your own terms. Learning how to manage your money is important at every age, and it is important to find a way that works best for you. Today, I am joined by Glen James, a retired financial advisor and creator and host of Millennial Money. Glen talks about how he wanted to help people with their money and the importance of finding what system works best for them. He even shares his own 3-step financial plan, which gives him balance in his own life. We also speak about other key areas of money matters, such as dealing with debt. And once you hear Glen speak, you can see why My Millennial Money has grown into a community of over 85,000. Well, welcome, Glen, to this podcast.
Thanks for having me, Mark. I'm really excited to have a chat.
Yeah, it's great. And I'll be really keen to get a bit of the last couple of years, because if I just set the scene, we both met as advisors on the AFA board. And I suppose it was that give back. You're always wanting to give back and actually, but do it differently, I suppose led you to the confines of sometimes, I suppose, if I can put it that way, of being an advisor, the one-to-one and the compliance and red tape to getting out there and providing help and education in a low-cost way. Was there a sort of a point in time you sort of, I need to do this differently?
Yeah, I was helping a lot of my friends and family and friends of friends with just basic cash flow management and basic budgeting. And I developed what's now today called the Glen James spending plan, which basically was just how I manage my own money, just how I taught clients to manage their own money. And it got to the point where it was half lazy of me and half functional as well, where I was just getting sick of repeating myself at the same time over and over again. And people would say, "Oh, Glen, how do I do my budget and how do I do my spending plan?" And I'm like, look, I will absolutely sit down with you, and this is like to friends or family members, but you have to watch my online course first. You have to put in the work first, then let's sit down and I'll go through with you what you filled out on the spreadsheet and the spending plan. So that was kind of happening in the background. It was a good barrier to entry if people were like, just wanted to waste my time and not really serious about changing their money habits and behaviors. And then, Mark, as you know, and as you said, we were both directors on the board of the Association of Financial Advisors, and I was a practicing advisor. And I had clients come in, and even similar to people listening right now, we've all been in the situation where we think we needed something, but that's not what we needed. I had people coming in saying, "Glen, I need financial advice." And I said, "No, you don't. You need to learn how to manage your money better. Yeah. You need to get a system in place. You need to spend less than you earn. And I can absolutely help you. Here's an online course for $99. You can self-paced, do it yourself. Or we can sit down every month for 6 months, but that's going to be a couple of $1,000s. I don't mind what you do. Here are the options." So it kind of, everything like I'm doing with My Millennial Money and my podcast really started from that. Here is a system that works for me. It's not the way, it's a way. And I'm just encouraging people to find a way that works for them with managing their money.
And I suppose one of the revelations, and I've been doing this a lot longer than you, was people just don't realize what they're spending their money on. I've had people who have had $1 million salary and spend every cent of it month to month and just can't believe it's all gone. And yet people who are 70,000, great savers, 2 properties later, that sort of thing.
Yeah, and it's hilarious because, well, maybe not hilarious for the people that are spending all the money that they're earning. And hey, I'm a spender by trade.
Same, yes.
I get that, right? And it's kind of funny when we look at the two scenarios. I had a client once who's big top 4 lawyer in Sydney, $400,000, $500,000 salary, just couldn't shake the $50,000 credit card bill.
Right.
That's actually no different to the individual or family with a household income of $80,000 or $100,000 who just can't shake the $3,500 credit card bill.
Yeah.
So it's the same. The common denominator is our behaviors and the person in the mirror. Like, we are our biggest problem, and we're also our biggest solution, thankfully.
Yeah. And at the end of the day, there's only so many hours in a day. There's only so many hours. So it's not that difficult when people say, I should be able to do this. This isn't rocket science. I should be able to, of course, if I save more than I earn, so if I save more than I spend, I'll have money left over. So I get that. But they say, why don't I get this? And just say, don't beat yourself up about it. You've got your family, you've got your fun time, you've got your spirituality, whatever you're doing. There is only so many hours in a day.
Yeah, and I think it's really important, when we are looking at our own money situation, or even like if your money situation's fine and you're listening to this for a bit of entertainment or encouragement, think about maybe your own health situation or your own relationship or your own career situation. But if we bring it back to money, I often encourage people just to be like, okay, we're here now. We can't change the past, but what are we going to do going forward? And, Mark, my personal financial plan, it's very simple, and I'll recite it to you right now. It's a 3-step financial plan.
Okay.
I want to be a generous giver. I want to spend less than I earn, and I want to invest the rest. And
excellent.
That's around the give some, save some, spend some. And if we've got balance in those 3 key areas of our life, I think the way that we manage our money day to day doesn't really matter. The way that we invest our money, whether it's superannuation or an investment account on the side, it doesn't really matter. What charities and what causes that we give to, well, that will take care of itself. The thing that I've resolved in my life, and I would encourage everyone listening to this, do you have balance in your life with your generosity, with enjoying some of the money, but also looking after future you?
Yeah, and that really resonates. And I'm sure when you talk to people about that, how much it resonates, because it is all about life balance. There's no use sort of saying, and you speak to so many clients over the years, and they said, I'm just working really hard now so that I'll have a better future. I said, well, yes, but you've got young children now. You don't want to give up that once in a lifetime opportunity for the future. You do need, yes, I get working hard, but you need balance. You need life balance.
Yeah. And it's about trade-offs as well. And I think, if we go down to the kind of 3 areas in my own personal financial plan, like if I was giving all my money away to charities, well, that doesn't help me today because I've got bills. I want to be able to enjoy the fruits of my labor. It also isn't looking after the Glen of the future, right?
Yep.
If I'm literally spending all my money, well, I'm not being generous. I'm being self-indulgent. And at the same time, I'm not putting money away for the future. But if I'm just investing all my money, I'm not enjoying the now. I'm not being generous. And, that mindset of amassing everything just for me in a piling up cash, that's not healthy like it is if I'm just consuming all my money with, penny whistles and moon pies. Like it's,
Yep.
So I think we just have to have balance. And my encouraging word to anyone listening would be, like, we can't change everything at once with our money, but can we think of one thing that might be out of balance and start to address that first? Okay.
Well, let's go down that point then, because I think that leads well into when you sort of said about before, you're spending all that you earn. The big problem I see, and when I talk to my clients who are mainly in their 50s and 60s, when they're talking about their adult children, is that they're spending more than they earn because it's just so easy debt, afterpay, credit cards, personal loans. Money has never been as cheap as it is, and people are racking up debt. That must be a big thing that you see all the time.
Yeah, and the problem is, we're in this environment now, Mark, where interest really isn't a big deal because I can go and buy something today, borrow the money, in 4 easy installments. It sounds so good, and
Yeah.
not pay any interest. I can go and buy the new lounge for my new condo that I've got, and I've moved out of home and I've got my new lounge, and I can get finance and not pay interest for 12 months. I can go and buy a new car from the dealer and over 4 years not pay any interest. My hypothesis is that interest isn't your problem. Your problem is that you're tying up your personal cash flow on things that are being consumed, and you're consuming them ahead of time. So we always want to make sure that, are we doing the us of tomorrow a favor today?
Right.
Now, that whether you're paying interest or not, me borrowing money for things that are consumable isn't doing me a favor of tomorrow. And a couple of reasons why. Usually with credit, we overspend. We know that there's not as much emotional hurt, so we'll overspend. But also, if I went and I need a new fridge, we'll say for example, and I wanted the $2,000 one, and I can pay that off over 18 months, right? That's easy. The problem is, get the fridge home, that's all well and good. Situation changes. What if, look back at COVID, things changed overnight out of our control, but I'm still on the hook for this payment of something I've consumed, but the fridge now isn't worth $2,000, probably worth $1,500. So even if I sold it, I'm still at a loss. So we've got to get away from this marketing mindset that just because it's no interest on a loan, that it's good, because the interest isn't your problem. It's tying up our cash flow. And for any young people that might be listening, or if you've got kids coming into adulthood, I think it's just that encouraging word that the interest is not the issue.
Right. Okay. So, and let's just take that one step further too, because you make a really relevant point there, in that interest isn't your friend, but these companies aren't doing this because they like you. So they already have done the numbers. They know that 1 in 4, 1 in 5 will fail and not pay it off in that interest-free time. So you are exactly as you're saying, it's going to tie up in penalties or just extend that time that your cash flow is held up.
Yeah, a funny kind of story I like to tell in relation to this. Remember the old magicians in the 80s and 90s, Siegfried and Roy?
Oh, yes,
They had
with the tigers.
With the big
lions.
tigers and the lions and all on stage. And it was quite amazing, Mark. They actually were able to tame the tiger for many years. But guess what? The tiger is not designed to be tamed. And one day, the tiger, live on stage that was trained, turned around, mauled one of them, grabbed them by the neck, and dragged him off stage. It's only a matter of time before you get tripped up by this thing that is designed to bite.
Right.
Like it's literally...
It's an interesting analogy.
Well, is it wrong?
Yeah, I get that. Yeah.
I just, we've got to just... And this is the problem for the next generation. All on social media, everything's so easy. We don't have to work hard to get this thing that we want now.
Yeah.
But it will just catch up with us.
It will. Yeah. And what do you talk, because it must be a lot of your friends or people you see that all have a gambling app, for example. That to me, like I said, the 80s and 90s, that with me was smoking. I grew up that time and that needed to be fixed, and it virtually has. But to me, gambling apps are the new smoking for this generation.
Yeah, it's wild. Gosh, where do you start? Well, to be honest, it's really no different than smoking from a physiologically sense. I can't even say whatever logical, whatever philosophy type word.
Yes.
Because it's ultimately an addiction.
Yeah.
And like all addictions, it's hard to stop. And we all know the stories of people who, like, I think Mike Tyson had a $400 million net worth and kind of blew it all. Not sure if it was about gambling. There might have been some gambling there. But we've all heard the stories of people gambling hundreds of thousands of dollars away. it's not even about the money. It's about the dopamine hit, right?
Sure. Absolutely. Yeah.
So I will just say to anyone who might be caught up in that, like, get some help and just really understand that it's not the answer to your problems.
Yeah.
Like we actually interviewed on My Millennial Money a psychologist around gambling
Okay.
and really unpacked it all. And I don't want to touch on it too much because I'm just not that type of trained professional. But I would just really kind of go back to that. If you can't self-diagnose and know that you can't not log into the app, or, you know, if you delete the app and you can't keep off it, like, you've got a problem. And it's okay. We're all got our thing that we struggle with. And I think it's okay to see a GP and ask for maybe even a mental health plan or a referral to a psychologist, because again, that's doing that. Is this doing the me of tomorrow a favor today?
Yeah. Yeah. And absolutely, you're correct there. And I'll just, even from a financial point of view, you want to try and go get a bank loan. You want to try and buy that property. You want to step up. All these things banks look at now, you know, what's your spending habits? And so you got that sort of thing. So from both sides, your mental health as well as your financial, it causes big problems.
Well, even it will, if you're in a relationship, it will creep into that relationship.
Yeah.
And I lived next to somebody once who, he told me that he lost $16,000 in gambling over the last few months, and his partner didn't know about it.
Yeah. Okay.
But guess what? It came out 4 months later. Like, the truth is buoyant.
Yeah.
So it's a relationship, risk as well there.
We do this whenever we talk. We just go off on tangents and all this. But one of the things I would like to do, because, you know, you've got a really clear message. It obviously resonates with the people that listen to you. But when you left being an advisor and left the board and wanted to say, I'm going to go do these podcasts and spread the message, and we're all a little bit skeptical now. 2 years later, I'm trying to do something sort of following your your footsteps. But what do you actually see so good about podcasts? Because that's really, you know, you've been doing a lot of things, newsletters, your website and all that, but it's your podcast that really seems to resonate with your age group especially.
Yeah, well, funny, a couple of observations there. Like, I think generally podcasting, it's a unique thing, because someone listening to this right now, Mark, they've actively made a decision to do this. Right. They haven't got home, turned on the TV, I'll make some dinner, a current affairs on in the background, and I'm watching it by default. It's on in the background. You know, someone might listen to this in bed when they, get to bed at night, or someone might listen to this on the commute to work or at the gym or whatnot. So podcasting is unique because people invite us in to their ear, and it's a really great thing because it is very intimate. It's personal. When I speak on my podcast, I always talk about the one. I pick up a microphone and there could be thousands and thousands of people listening, but in my mind, I'm just talking to the one, because I want to imagine as if there was 5 of us sitting around a campfire and we're just having a chat. So I think the good thing about podcasting is it is actually, we are building a community, and it's a two-way conversation. Where, traditional radio and TV is just broadcasting, like we've got the My Millennial Money Facebook group. There's almost 40,000 people in there. So it's a vibrant, engaged community. If a thing comes up in the group, we can address it on the podcast. And so that's all kind of, in that sense, it's really good. The other thing is we're finding now that we're getting listeners who are 16, 17, 18 years old listening.
Okay.
I'm getting people in their 50s and 60s listening. In fact, I've kind of, like, the podcast is called My Millennial Money. I have toyed with the idea of changing the name, just to be like M3 Money or something like that, because as much as the only reason, and we can throw this around, like the only reason it's called My Millennial Money is because I'm a millennial and I speak millennial.
Yeah.
Now, every single money principle that we've ever talked with any client with, it's actually the same. That give some, save some, spend some, invest the rest, all that stuff. That works if you're 18 or 80.
Absolutely.
Spend less than you earn. It works whatever age you're at.
Yeah.
Do the self of tomorrow a favor today. That works at any age. So it is more around the language and the delivery.
Yeah, and I really do need to congratulate, because I just really appreciated when you actually did you helped the frontliners, and gave them access to your online course, which was just a great thing to do. But I can see, and I can see how much that was picked up on by the amount of people that did the course. That must be really pleasing for you, that, from a financial advisor, you can really just one-to-one. And how many clients can you see in a year? But you're absolutely helping thousands. As you said, how many was in your Facebook community? That's just great from an Australian or around whoever's listening, that you're able to help.
Yeah, it blows my mind. So yeah, for those who aren't aware, in I think it was January. I think January or February. I forget. I think January. We've all been through this COVID thing, right? And if you know somebody who's a frontline medical worker, doctor, nurse, swab person, give you the brain tickle, pathology, like that has been the biggest squeeze on the world, particularly the medical side. And if you've ever been in hospital, like last time I was in hospital, like the nurses run that place.
Yeah,
and
totally.
I just thought, I can't, and this is funny, Mark, with all the natural disasters in Australia and all that, like people, like I'm just really intentional of, I can only do what I can do. And, one of those things, we opened it up. So if you're a medical professional for the January, you can just jump in and we'll give you a copy of my investing course and my cash flow course. And the retail prices for all that, like we gave over $150,000 worth of courses away.
Just mind blowing. Yeah.
So, but that's what I could do. And then someone's like, oh, well, the New South Wales and Brisbane floods, can my Millennial Money, band together and do a funding thing? And at first instance, you're like, yeah, absolutely. But then secondly, it's like, well, you know what? No, I can only just encourage you to give to a charity because the money will get there faster.
Yeah.
And I don't want to have to handle other people's money. So yeah, and that's the interesting thing with community, right? We have to, the people who listen to My Millennial Money, there's always some great ideas, but yeah, I am a leader and have to make a judgment call. And even with the giving and the donations, I'm just using my platform, not to collect money and be a clearinghouse for one charity, just as an encouraging platform to say, be a generous person in your life. And if you can't think of the last time you were generous, guess what? It's time to be generous again.
Yeah. And just have always believe you always get back tenfold. I've always believed giving away, you always get back tenfold. And I've seen it again and again. And it's just something I've always lived by. It just makes sense.
Yeah, you won't be worse off for being generous. But I will say, we talk a lot about giving and generosity, particularly on My Millennial Money. But please hear me, like, I'm a big believer that, your own oxygen mask on first, then help others. If you're still trying to get out of debt, if you're still trying to get a leg up, now is not the time for you to be giving your money away. It's smart to look after your own house first. You can give a smile, you can make a meal, you can send a nice message. So please don't take that as Glen saying everyone give money away.
Yeah, no. Okay, so we've talked about, yes, get your spending right, get your cash flow right. That's the basis of any good plan, is getting your cash flow right. Talked about the easy debt and just making sure you keep that under control. One step further, they've got that all done. And you talk plenty about now, say, for example, the sea change, rent vesting, getting into property, because definitely every generation, including millennials, all still love property, but it may not be your own home. It may be a rent vesting case because you still like that inner city lifestyle or something, but you want something working in the background. What's your sort of general feel on that?
Yeah, my general feel is, and particularly, I don't know the complete dynamics of your audience, but if you are listening and you do have children coming into adulthood, we just have to be really careful not to put our standards on a generation of tomorrow because it's just different. Sydney now, like you think, Mark, I don't want to be presumptuous about your age, but
Glenn.
Can you remember, so for example, when you were 20 years old,
Yes.
back in 1931,
Yes.
no, when you were 20 years
In the
old,
70s. Yep.
I would hypothesize there were not daily flights with Qantas, United, Delta, bloody Virgin, Fiji Air, all that to LA, daily flights with multiple carriers, right? Just to LA, to London, so what I'm saying is now Sydney is, particularly Sydney, Melbourne, Brisbane, they are real international cities. And if we have a look at real international cities, first home buyers aren't buying in New York. They're not buying in London. We're renting because, as you said, Mark, like rent money isn't dead money if you really not spending more than 30% of your net take-home household income on rent.
Right.
And secondly, if you've got intentions to build wealth elsewhere and you've got a plan and you're dialed in.
Yeah. Good income producing assets in the background. Yep.
Yeah. So you've got to, like, rent money's not dead money because you've got to live somewhere. I mean, there was a thing in my Facebook group by an anonymous person just today, and they said, "Oh, I'm single, one income. I'm thinking about spending 45 to 55% of my income on rent because I want to no, you'll end up in debt. Like, it's not sustainable. If you've got a mortgage and you're paying more than 40% of your net household income to the mortgage, by default, you're in mortgage stress. So that doesn't mean that it's different and you get a magical pass on maths just because you're renting. So I think it's okay to understand that we're living in a different world now from 2-3 generations ago. So things are different. If you are a parent of people coming into adulthood and you do want to help them with buying their first property or getting into the property market via an investment property, and you don't want to do a parental guarantee, but you still want to help, maybe you could say, hey, what about you save up 5% and I'll cover the lender's mortgage insurance, or I'll cover the stamp duty if there's no stamp duty concession. So at least you are helping, but it's not just here's 20 grand, see you later. It's like, you go ahead and show me you can save 25, 30 grand. Once you get to that threshold, we're happy as your parents or your parent or whatever the situation is, we're happy to pay for the lender's mortgage insurance, which might be $15,000 as a once-off gift.
Yeah. No, I think there's no problem. And that's why I speak to a lot of my clients in their 50s and 60s, and they're wanting to help their millennial children. I say, just don't give it away. If you can do that. And even the personal guarantee, most people say, oh, I don't want it if they default on the line. Well, no, it's only your percentage that you're doing the personal guarantee for. So there's definitely ways you can help. But yeah, I think it's something exactly as you said. They've still got to get into a disciplined savings plan.
Yeah.
You can then match that, or provide the stamp duty, or provide, as you said, the loan guarantee. So no, I think absolutely you're on the right track. But I just really like it because I definitely got raised when it was, you need to buy your own home. You just do. That's the great Australian dream. And I've absolutely been converted to seeing people saying, no, if you want to live in Sydney especially, you're not going to be able to afford, most likely, the average 20 to 30-year-old in Sydney, a home. But there's no question you should still be able to, as you said, I like that 30% of your take-home pay. And then, but as long as you're looking to build wealth through other income-producing assets.
Yeah, and I really think it's important to know that when we see on the news and they say the housing market and the Sydney market, there are markets within markets. So it's not like you still might be able to get a small apartment or a townhouse, within half an hour of the CBD. There are markets within markets, but I will say to any young people out there, life is not without its sacrifices. What's your sacrifice? Are you not buying a new car and having a car loan because you want to drive a $6,000 beater or something like that? Are you not going to brunch 3 times a week? Are you cooking lunch at home? So everything's a trade-off and a sacrifice. It's not easy, but it's worth it. That's what I really want to say as well. So it's possible.
And I think, when you talk about your online course, the cash flow, one of the things is listing all the things you're spending your money on. Because to a lot of people I see, they just say, we don't know where our money's going. And until you actually do that exercise, then you can make at least informed decisions about, well, okay, if I haven't got any cash flow, where am I going to do the cutbacks?
Absolutely. Yeah. And that's like, to make any type of decision, you need to get the data on the table. In fact, Mark, I just pulled up Facebook here. This is someone in the My Millennial Money group, and this is so amazing. Hello, everyone. I'm about to embark on purchasing my first property on a single income. Yay. This group and Glen's book has helped me so much in saving for my deposit and educating myself. So this person have been dialed in with educating themselves, have been plugged into an encouraging community. And then, she's looking to purchase a 3-bedroom townhouse, south side of Brisbane, Queensland, with only her as the occupier. So we are seeing these things,
these wins
and things in the Facebook group, how people have made a decision, been dialed in, been intentional, listened to podcasts, been around other like-minded people, turned away the noise to say it's not possible, but you'll be surprised with what you can achieve.
Yeah, and I agree with all that. And it's one of the things that, as advisors, we were taught that, but it's definitely what the wealthy have been teaching their kids for generations about how using debt, good debt, to actually leverage and buy good income producing assets that will just grow while you sleep. Whereas most people think, I've spoken to a lot of parents saying, no, I don't want my kids to get into debt. Well, no, it's the right type of debt. And it's important, I suppose, on your property podcast, that must be something you reiterate over and over again.
Yeah, that's right. And it's all about, just being smart, having your buffers in place.
Yeah.
And for the parents listening, maybe you'll say, we will do the parental guarantee for your first home or first investment property, but you've got to have income insurance and you've got to pay for it. Just some practical things, so both people are bringing something to the table for this common outcome.
Yeah. One thing I wouldn't mind just exploring with you is the use of specialists. There's definitely, you're educating, you've got the property podcast, which is educating, but at some point, whether it's I've made that step, I'm going to actually buy that investment property, actually going out and getting specialty help, even getting a financial advisor, you shouldn't think that you've got to do it all on your own.
No, you don't. And, even if you wanted to, for those wondering, the My Millennial Property podcast, John Pigeon, who's the host of my main show, he runs that with Emily Wallace. He's a property coach. Right. I used to refer clients to him when I had my practice, Mark, because, people come in and say, we want to buy an investment property. And in the money world, a property is no different than a set of steak knives, not a financial product. So, we just can't go there. But he's a property coach and he walks people through different scenarios. But there's an episode on the My Millennial Money Property or the My Millennial Property podcast, and it's a clarity call with Ella. And Ella's a girl, she's 25, single, good income, and John did an episode with her talking about her goals and whatnot, just to give her that clarity. So we offer people a clarity call with John, which is kind of an hour on the phone, just bouncing some ideas around their property strategy. Because the problem that we have is we end up in our own echo chamber. And sometimes we just need a coach that's out behind seeing a different angle just to go, you're on the right track here.
Yeah. Now, there's a lot of clients we've seen and still coaching now that we just take the emotion out of it sometimes. And it's just, that's all they need. It's such an emotional decision, and it is such an expensive decision, but you just need a third person who just, as you said, provides that clarity.
Without the emotional buy-in, good or bad.
Yeah, exactly. And sometimes you've got to be told the hard answers as well. I've taken heaps of your time, so thanks for all that, Glen. One of the things I do like to ask is, have you heard a best piece of advice? What's the maybe, whether it's parent or something like that? You've given stacks today, but is there anything else that stands out?
Oh, yeah, there is. And actually my dentist actually told me this, of all things, only floss between the teeth you want to keep. No, not that one. She said to me, and my office used to be next to my dentist's, and, over the years of me being there, we became friends, and we usually catch up for lunch with her husband and whatnot. And she was telling me a random story, and, she was about to blow up at the school because one of her kids and all that. And she said to me, I was sitting in the car, like my blood was boiling, about to go and strangle the teacher type thing. Yeah. And she said, no, I'm going to seek first to understand.
Wow.
And that's really, it's just funny, like an off comment like that can have such a big difference. And that's one thing that I've learned in a lot of, situations with my team, with listeners, with conflict resolution. And no, let's just seek first to understand someone else's point of view before we jump in.
Yeah. Well done. Well said.
Yeah. And sorry, it wasn't some money story.
No. I think the best ones are, I think the best ones are actually usually non-financial. So no, I really like that. Well, Glen, I've appreciated your time, and hopefully we may get you back sometime.
Anytime. Thanks, Mark.
Okay. Bye, Glen. I hope you enjoyed this episode. If you'd like to know more about Glen James and My Millennial Money, visit his website, mymillennial.money, or find his My Millennial Money podcast on your platform of choice. Also, feel free to either email me on admin@themoneysandwich.com or visit our website, themoneysandwich.com, if you have any question or would like to learn more. Enjoyed this episode and want to hear more of A Bite from the Money Sandwich? Make sure you subscribe on your platform of choice so you can automatically receive each episode as soon as it's released. As with every podcast, this information is not advice, as not personalized to your own situation, and past performance is never guaranteed for the future. What we are trying to do here is to provide tips, coaching, and education to help improve your money knowledge, which we believe can only be a good thing. See you next time when we take another bite from the Money Sandwich.